So there's a recording going, guys. So if everyone can review this. So we'll just kind of try and stay respectful towards everybody too. And again, we'll just probably kick this off as soon as a few more people join. We'll give people till just after 10. And anyone that shows up late can just catch up off the recording. The link will be sent to everyone after. It's going to be an unlisted YouTube link. So if when you get it, if it's not HD right away, maybe just give it a day or two. It's not on my end. That's kind of how long YouTube takes to make stuff HD, and I have no idea why, but that's how they do it now. It used to just be a couple hours. But yeah, for everyone just joining, like I said, we'll see how this one goes. And depending how this one goes with the participation and the questions and stuff, we will likely make adjustments. For the time being, we'll just go with the flow. If things get really hectic, maybe we'll do something like saving questions till the end or something next time. But yeah, this is the first one, so I have no idea what to expect. We'll go from there. And for the most part, we're going to just focus on 4 hour and 15 minutes. We'll give guys till 10:02, and then we'll get going here. And if you guys want to annotate or ask questions, that's totally cool. Unmute yourself, ask a question, mute yourself again. Anybody that wants to annotate, please take your annotations off once we're kind of done with the area. That'll make things a little simpler. And yeah. All right, so yeah, we're just gonna kind of get going here, and anyone that joins in, they can catch up. Let's see, maybe I'll keep the chat open here. But yeah, so we have 4 hour structure here. We were bullish on it. We have a 4 hour demand and a 4 hour supply up here. Now, regularly at this point to me would not be structure. For me, for this to be structured, it would have to make a new high. However, we've had multiple failed reactions off this spot. Failed reactions meaning that this was your swing point that failed to take this high multiple times. So I'm going to classify this as structure in this content here. This large candle here would be your sort of order block, I guess you could say. I'm not going to pull it because it's just kind of big and ugly, but what we'll do is say that this is the bottom of it, and we'll just note it there. Okay, so that's kind of where we are on 4 hour. That's our supply, that's our demand. This is sort of a supply area. If we go down to our 15 minutes, we can get a little more refined. 15 minutes, obviously bearish. We have, so this is again your 4 hour. I would probably pull this wick across. That to me would be a valid zone. The reason this zone is valid is price made higher prices from there. So I would be more than happy to use this as some sort of a demand. This line here is where I set our 4 hour OB started. So whenever we get a clean push like this, when you get just 2 big candles or 3 big candles, look to the left, and wherever you have a low or a high, the swing point, that actually becomes some sort of a demand or supply, depending what the case may be. So in this case, we're going to call that supply. And we could probably even refine that to this wick. And again, if you guys have questions as we get going, I'd be more than happy to answer them. I'll just kind of go through. So this wick would be an area to me. This wick right here would be something to me. And that's probably all we're gonna pull for now. For those of you guys that are coming over from Tyson's group, you're probably used to seeing 5-minute OBs and stuff. Can we go over how you pick your POIs? So I made a video on this on YouTube. You're more than welcome to check it out. It'll kind of give you more detail than I'm capable of going in here. But basically, we want the POIs to make some sort of a high or a low. If it doesn't make some sort of a high or a low, chances are it's not as strong of a POI. So this zone to me, for example, this continued to push on to take this low out. This zone to me, I think ICT calls them breaker blocks or something. The reason I pull this wick instead of this whole area is this wick is where price kind of took off for me. If you're not sure which wick you should pull or whatever, you're more than welcome to pull your whole area. And whenever we get a clean push like this, we're obviously bearish. Price should not come past these two OBs. If price does come past this, we can expect this high to go. So right now, this high is strong, but this high did not drop any inducement on the way down. So generally, when there's no inducement dropped on the way down, if they come back up past these OBs, they'll run this high. Anytime you see a clean push, if it gets past these, they'll run it. That's kind of where we are right now for the POIs. I did have a few people message me asking to do both London and New York since we have such a wide demographic. So I thought this would be a good time to kind of go over what time you should trade and not. So for those of you guys that trade London, so this is London time, by the way. I run my charts in London time. You want to be at the charts for 6:30. By 7 o'clock, you have Frankfurt open. That's where your volume begins. So your highest chance of success trading London is from 7 o'clock to 10 o'clock London time. Your highest chance of trading the New York session is 1300 to 1600. The reason that's your best probability is that is your most volume in the day. The more volume you have behind the move, the higher chance of success you have. And ultimately, all we're looking for is to give ourselves the best edge possible. That doesn't mean you can't trade in between that time. Like I know some people trade in between London and New York. I know some of you guys trade Tokyo. It's just volume's lower, probability's lower. So if we're looking here now, 6:15, we have our POIs for now. As something changes, we're going to adjust our POIs. So I would say for now, this low to this range to kind of this candle wick would be our range. And if price goes higher or lower, we can definitely adjust this. And the fibs just kind of tell us how we're priced as to where we are. And just before we get going too, what I want to note too is this high is strong right now. The low that's put in this high is weak right now because it failed to continue making a high. So we can formulate an idea right now that 4-hour and 15-minute is bearish, and our higher probability trades will be bearish to the downside. Obviously, we can still take buys, but buys will be lower probability and they will be likely shorter trades. So now just going down to the 1 minute. Just to know, how many of you guys trade London here and how many trade New York? Just kind of annotate underneath. I'm just kind of curious. Give me a check mark or something. Okay, so we kind of have a little bit of everything. Okay, perfect. That's cool. We'll do both London and New York. We'll see how far we get, and we'll probably just keep doing both sessions just because it's kind of all over the world. So we have our POIs picked. And ideally, our better trades are going to be sells. So our sells are going to, we were going to want to form them from one of our POIs up here. Our buys are obviously from this POI here. And obvious, let's see, admit. Is that everybody? I think that's everybody. Okay, cool. So we'll just roll with that. So if we kind of just play price right now, 7 o'clock is Frankfurt Open. And Frankfurt Open is when your volume starts to kick in for the European side of things. And Frankfurt, so this isn't always what it does, but more often than not, Frankfurt likes to sweep the Tokyo lows. So everything right here, all of these lows is stacked liquidity. And this is your stacked buy side liquidity. And more often than not, and again, this doesn't always happen, but Frankfurt likes to sweep that and go the other direction. And that's usually the start of London. I'd say 2 or 3 days a week, you'll likely get some sort of a sweep. So if you come up and you sweep the highs, chances are London will take price down. Not always, but more often than not, that liquidity will be taken. So right now, we're just going to kind of play price, see what happens. Any buys that we're looking for are counter trend. So we're going to want a little extra confluence to get involved into a buy as compared to a sell. So there's you guys' Frankfurt sweep. Those of you guys that trade London, after the backtesting session, just go check it out. You'll notice that 2-3 times a week, Frankfurt will sweep, London will go the other way. And that's kind of how your session high or low is printed. And that's usually a strong and protected zone. So kind of go see what happens. Let's see, make this a little bigger. So we could definitely say all our lows have been swept. And we could also, let's just play price a little more here. So you could say this is your sort of, let's see. You have kind of a supply here. I could even probably refine it to this wick. And yeah, we'll just go from there. So you probably, if you went down to the seconds, you could say you have a supply here too in this wick. We're not going to do that. This is counter trend again. Anytime we're trading counter trend, you probably want a move that's more probable. So in that case, what we'll want is to see the high go. So you don't get much of an interaction, but a little bit. And if we just look at this, the way I would look at this is something in this zone caused this move. You didn't get much of a reaction of any sort. So I would say likely that something in this candle caused that. Let's see. We'll just go check our 15. So 15 didn't give us anything yet. As of right now, we could say this demand down here is holding. Liquidity's been swept. If you see this long wick right here, that's area sweep. And we want to trade away from the sweep. And again, being counter trend, I wouldn't be looking to take this trade too far. I would probably look at the first POI. Maybe I'll leave a little on to see if it'll hit the second POI. And yeah, we'll just kind of go from there. Ultimately, we're looking for sells, guys. Sells will be way higher probability for us and likely be a better trade. Ooh. Okay, so that one there, depending on spread, we may or may not take an L on it, which is totally fine. Man, what kind of POI is it? Where do you target with counter trend? So if we go back to the 15-minute side of things, I would target one of these. And for me, that would be as far as I go. I take the majority off from here. And the next area would be here. The first one, how is it a POI? So this is this is what you'd call a breaker block. And this whole area would be a POI. It put in your high, it got broken. Anytime you have a clean push, anything to the left that kind of made the high, I'll pull across. If you're not sure if it's what part of that's the POI, pull the whole area. To me, this wick is where the move initiated. And yeah, that's kind of how we'll go. So depending how tight we took our stop or whatever, we could say this will be our first loss. And that's not a big deal. We'll just reel that in and see what happens here. I'm totally fine with that. London hasn't opened yet, so now we came even lower. So you could even go as far as saying liquidity's been swept once again. And with the R's we get, we're not too worried about taking the odd lots here and there. I'm not going to worry about it. We'll find something else. And yeah. So now if you look at this bottom, we're getting rejections again. So we can assume that maybe that our sweep is complete and we'll be going towards our POI. Rob, would you also consider the first POI as a demand to supply, or is it different? So yeah, you did. This is a flip zone for sure. This is, to me, this is totally valid. If we take a loss on it, that's totally cool. And depending if we're with trend or counter trend is when we'll really start looking at which supply or demand breaks really matter. And I'm going to explain this right here. So here we have two sort of supply zones. If we're counter trend, I would like to see this top go. If we're with trend, like say we were bullish and this went, I would take a trade on whatever takes this. So right here, we could say we have a sweep of the lows once again. And for a change of character to complete, we need to see that high go. So let's see, change of character bottom. So now we want to see this high go for this change of character to complete. The encounter trend, like I said, I would like to see the top zone go. Depends on your risk tolerance. So we have our initial reaction here. So depending on your risk tolerance, you guys may be cowboys and be willing to jump in on whatever takes out that reaction point. And if you guys want to do that, we could totally take that trade. The safer trade would definitely be if that high goes. So if this supply goes, that would be a flip zone, meaning that supply no longer has control, demand takes control, but it's just a flip zone. If this top goes, we get a complete change of character with a flip zone, and that's just a little bit higher probability when we're counter trend. And yeah, so here we kind of had a bit of an interaction. You had a bit of rejection. We went back. Now, depending how you guys want to play this, we could totally take a trade off this, or if you guys want, we can wait for a change of character to complete. And we'll take a trade off the next one going if it goes. Totally up to you guys. Let's see. Do you guys want to take the first trade, or do you want to wait for the second trade? What do you guys think? Both split risk. We got no's. First trade, I think that says. So we got a lot of no's. We got some cowboys here that want to take it. Being it's a backtesting session, and why don't we go with the advice of both split risk or whatever, and we'll see how it plays out. And yeah, we'll go from there. Totally cool. It is a backtesting session, so at the end of the day, it's not a big deal. But I want you guys to see what the interaction's like, and you'll also see that a lot of times the first zone will fail, and the second zone going will give you higher probability. But yeah, so we have a sort of an area. I would say something in here caused break of price. If price taps into that, we'll say we take our first trade, and we'll also look at how we get. So that's our reaction point for the second zone now. So I'll mark a reaction zone here, and whatever takes that, we can also look at taking that, as that'll be ultimately the safer trade. Being counter trend, we're just targeting this. We're not shooting for the moon here. Ultimately, we're looking for sells, and that would be your top off your first trade. So let's just say we do take this. We'll just keep things pretty skinny. Also, I don't know how you guys manage. Myself, when I leave my stops open most of the time, when my trade gets to 4R, so wherever that is, I sell off 20% of my position and I leave my stops open, and I usually leave the rest to target. Then if it comes back and takes me out, I'm totally fine with that. My risk is covered. So yeah, we'll just kind of see what happens. So you got a pretty good reaction there. You got a really good reaction there. So now we can look at the second trade. Whoops. Just gonna make this a little smaller. So now we're gonna go back and look at what took out this reaction point. Well, we could say the move originated here. And I'd be more than happy to take this trade. This would be the better trade out of the two by far. Being counter trend, that's your safer trade. We're always looking at the interaction between buyers and sellers and what takes out the reaction point. Why do you take entry at 25% of the OB? Do you auto manage your trade? So the 25% thing came from my initial people that taught me to take my limits at 50%. And I found myself missing a lot of my limit orders. So had I taken it at 50%, we would have totally missed this one. And even the second one, depending where we took it, we would totally miss it. 25% to me usually gets you in the trade. If I'm going to be 100% honest with you guys, I don't use limits that often. I mark out my 1 minute zones and I go to the 15-second or the 5-second and I look at how it reacts. And I usually market execute now. And that kind of stops me from missing my orders. How do I manage? So I use magic keys and I have a partial TP button. As soon as I hit a trade, I hit partial TP, I hit 4R, and it automatically sells 20% for me. Can you see the chart a little better there, bud? So that's why the 25% happened. The 50%, I found myself missing a lot of good trades. If you're really unsure, if the stop's small enough, you could literally take the whole area. Like myself, I look for anything between 1 to 3 pip stops. If this whole zone ends up being like 6 pips, I'll probably take an order at 50% if I am trying to take a smaller stop. I won't enter a euro trade with 5 or 6 pips. It's just not worth it to me. So yeah, let's see. And we'll just kind of go forward here. I also, so I told you guys from 7 to 10 is our highest probability zone for London. And what I want to do here is we're going to see how trades form between that time. And then we're going to look at how trades form between the dead volume time. And you'll notice a huge difference. So we said we took a split risk. For the sake of easiness, let's just say we're taking 1% on these. We took a 0.5% on each. We said we're going to split the risk because there was 2 areas. Again, myself, I would probably take 80–90% off at the first POI and leave the rest open. So let's see. So we'll kind of play price. And just so we all know too, if we look at our fib here, both of our entries came from the discount of the range. So now we're kind of getting to the area where it's getting to the premium pricing. And since we're in the range, I'm not interested in buying in premium. If we're in the leg and price is just running bullish, yeah, for sure. Expectational order flow trumps premium and discount, and we can keep buying. But us being in a range right now, we are not one bit interested in buying in premium. Whoever's drawing, I don't know what you're saying there, bud, but feel free to ask a question or feel free to type it out and remove your annotations, please. So you can kind of see around the 50% area of the range, price doesn't really move that well, and that'll kind of happen over and over. I have no idea how to clear people's annotations here. Let's see. Does anyone know how to clear? Yeah, feel free to draw stuff, guys. I don't really care. Just take your annotations off when you're done, because I honestly don't even know how to remove it. And if anyone knows how to remove annotations, let me know. But yeah, feel free to draw something. Yeah, so that's totally a supply zone. When you're starting, yeah, totally. If you want to take something like that, that's totally fine. Myself, whenever I see a leg, if there's like 3 or 4 supplies, I'm gonna probably just go with the top 2. I'm not really interested in the ones that are lower. I want to see the higher ones go. I want to know price is really interested in going. If it just takes the first one out, I don't know if it's taking the next 2 out. So the more of an extreme of a supply you wait for it to go, the higher probability your trade becomes. Us being counter trend, I probably wouldn't even pull that. I'd just go with the top 2. And if you're really smart, you'd probably just wait for the top one to go. Also, I forgot to mention this wick here. When we took this wick, that was our change of character that completed. So I know a lot of people had, let's see, change of character top. So I know a lot of people had messaged me and asked me what the difference between a flip is and what a change of character in a flip is. Right here, when we took this zone, that's a flip. When we took this top zone, that's a change of character paired with a flip. This is way higher probability than the first trade. Yep, I would also do the same. Like you say, it's counter trend, high risk. Yeah, you bet. Ultimately, we're just trying to be as smart as possible with all this. I'll be the first one to admit, me being on the seconds, I do a lot of stupid shit and it bites me in the ass a lot. So the less stupid shit you can do, the more likely you are to succeed. I'm not sure what that says. Can you guys not talk? Hold on. I thought people can talk. I think, oh, this says change of character, chalk, whatever you want to call it. This to me, I pulled that as an OB because it drove this last low end. So to me, that's a valid area. That area was our first loss, which is totally fine. I think on these positions here, we'd be break even now. And whoever this is, can you please remove your annotation? I really don't have a freaking clue how to get rid of it. Does anyone actually know how to remove annotations? Because I seriously do not have a clue. Might have to figure that out. All right, so annotations from your meeting controls, click clear all, meeting control, okay. And where would that be? Top of screen. This one? Oh yeah, okay. Clear all drawings. Perfect, cool, thank you. Look at that, I learned something. Thank you guys. So yeah, we're broke even on these trades. So if this comes back and takes us out, we're fine. And we'll just kind of play price forward. So this is the first hour of London. Now, I don't know how you guys would manage. Myself, I would probably close 90% of my trade here and maybe leave 10% running here. Being it's counter trend, chances are it won't even make the second POI. But right now we could say, let's see, so that's a 10R, that's a 12R. We had split risk on the two, so you're up 11R on these two trades combined, and we lost 1R on that. So realistically, if this was me trading London, I'd probably just leave the screen, take the day off. I'd be done. But you guys can see losses mean for nothing with this kind of R. Like I've had days where I've taken 3-4 losses and 1 win, and I walked away with a lot of profit. And that's the beauty of trading something like Euro and being able to have a small stop loss. So we'll kind of carry on with price here. We'll see what it does. And also before I get going, anybody that hangs out on the 1 minute, make sure you, I don't know if you need to set a timer. And I know a lot of guys from Tyson's group that came in here, you guys hang out on the 5 minutes. I don't spend a lot of time on the 5 minutes, but I'll go to the 10 and 15. So we haven't really created a new range yet, but as this range gets higher, we got to adjust our fib accordingly. If we go even here, actually, we're going to adjust accordingly from the low to the high. And yeah, let's see, if we are CT and we hit a POI, I'll take the full amount off. Yeah, that's totally smart, man. And if I was being honest with you, I'd probably take the full amount off too. But I do get greedy and I do leave 10% on sometimes just to see it go. But yeah, we'll just kind of see what kind of reaction we get. And again, guys, we're looking for sells. We are looking for sells as we are bearish. Sells are ultimately going to be what makes us more money. So now if we kind of look at this, you could say this is kind of a demand area here. I wouldn't really look at this as demand as much as I would look at this candle. And the reason is that's kind of your swing point. That's our better demand. So myself, I'll pull demand. So I used to just trade break a structure. And then somebody had shown me pulling supplies and demands and marking reaction points and looking at what takes out the reaction points. And that's kind of when my trading changed for me. So if you've seen one of my live charts before I share it, there is probably 50 of these blocks pulled. It's a disaster, but somehow it helps me stay out of a lot of bad stuff. Whatever works for you. There's no wrong or right whatsoever. We can call this our first initial reaction point, and we can kind of see what happens with it. Again, we're looking for sells, and yeah, it's higher probability. So we had a demand fail here. So here you have kind of an interesting area. If I went on the seconds, I could probably say there's something in these wicks that caused that. Or the second area we could possibly sell off as that. Being how price didn't come through and we did have a sort of a reaction rather than just one big candle, I would be more than happy to take a trade off here. Now, if we take a loss on this, I am more than happy to take another trade off there too. Both are valid POIs. Hey man, slightly off topic, but could you give some insights as to risk with prop firms with drawdown limit? I trade 0.25%. I don't used to trade 1%, and it didn't do me any good. I made more money trading quarters. What I found was my psychology fell apart when I lost a couple of 1% trades. Whereas if I lose 0.75% trades, I haven't even lost a percent. I don't care. My mind stays good enough to take one more trade. If I lose 1% trades, I'm done for the day. My psychology's done. I know enough to walk away from the screen. But yeah, prop firms 0.25%. And as you get more confident, maybe move up to 0.3s, 0.4s, 0.5s. Sometimes I'll go up to a 0.5%. If I'm up like 10, 15R on the day, then I don't mind risking a 0.5%. But I'll never make my first trade a 0.5%. It's just too much risk for me. Like, I don't know how your guys' psychology is, but mine, the more I lose, the more I fall apart. So I try to keep my losses smaller, and that's kind of the edge I give myself. So that's our reaction point. And back to this is a valid area, and the extreme is always valid. we always have 2 points. Like I said, if it comes through the first one, I am more than happy to sell off the second one and take that loss. Yeah. So we could say, oh, so how do you calculate size? Well, it's a fast way. So I use magic keys. All my lot sizes are calculated for me. If you don't have magic keys, just figure out your account size and what stops you like to use. And yeah, my account's 100K. I'm going to trade with a 2-pip stop. I'm going to take X amount of loss because that's my risk. If it's a 3-pip stop, I'm going to take X amount of loss, and just write it down on a piece of paper. And once you trade that amount for a couple of days, you'll kind of beat it into your head. And that's where trading one pair is really nice. Yeah, you could use FX Book Calculator, absolutely. Honestly, once you take a few trades, like, you don't have to be perfect, absolutely perfect with your risk management. We're just making sure you're not taking like 5% in one trade, right? Like, if I say take 0.25% and you end up taking 0.2 or 0.3%, it's not the end of the world. I just don't want you taking a 2% trade. Like, just know the difference. So that's our what's the experience with magic keys. They're really good. They're life altering for me because on the seconds they execute in a click of a button, and my risk management's all done with a button. So I love magic keys. I probably couldn't trade without them at this point. So now that we've sat on the 1 minute, let's go back to the 15-minute and look at the logical targets. So my first logical area to target would be this low. We are bearish. We're always looking to run the lows. Again, I don't know how you guys manage, but I keep my stops open at all costs, and it's just that 4 hour will break even. So if we end up breaking even, that's cool. So being that we're being that we're with trend, I'd have no issues holding this, and I would probably not even close most of this. I'd probably close 50, 60%, maybe 70, and I'd leave the rest on. And when I say I'd leave the rest on, I'd probably leave the rest on to run the 4 hour low, which is at the bottom of this large OB we pulled in the beginning, because it's ultimately weak too. But ultimately, we're just looking for sells from this POI. If we get to this POI, we're looking for sells. If we happen to catch buys, cool. Just understand that there is a very high probability that our buys will fail. I think Stinu charges now. I don't remember, but yeah, I think it works pretty well too. So we'd be break even on this trade right now. Our risk is off the table. I have no problems not taking a partial. If it takes us out, that's totally fine. But to me, this low should go. If it doesn't, that's totally fine. Yeah, it's still early in the session. But 10 o'clock's kind of where London starts losing volume, and you guys will kind of see a different interaction between price at that point. And again, if we just go back to, you guys can see back to our fib, this sell came from the premium. So again, we're well priced. We don't want to be selling down here. It's poorly priced. Left equal lows. Yeah, you got equal lows here, sort of equal lows. They'll go. To me, this is weak. Being weak that it doesn't create any new structure. It's just substructure, right? And being with trend, I don't have a problem aiming for the low. Why did you enter second instead of the top entry? Okay, so the purple zone is a reaction point. We pull our demand that put in the last high and took these highs here. This to me is a strong zone. If demand is to maintain control, this demand needs to hold. Our initial tap is this purple point. That's a reaction point. And the next candle, the next two candles actually, is what caused that reaction point to fail. So whatever caused the reaction point to fail, that becomes a point of interest to me. If price came right through this and to the top one, I am happy taking a loss on this one and entering on this again. You never 100% know if your zone's going to work out, but being that we're bearish, I know that one of these zones should work. If you don't want to chance the loss, you can always wait for just the extremes to get tapped. You'll miss trades, but you'll have higher quality trades. How you manage is up to you. I'm kind of slightly retarded when I get into trades, so I probably take more than I should. But that's kind of how I look at it. I don't care about taking a loss if the next one goes. And yeah, we're just kind of see what happens with price. So as far as I can tell, our analysis is on point. That low should go. If it doesn't, that's totally fine. And so our low hasn't gone yet, but oh, there it goes. Okay. So now, right by looking at this, the first thing you guys will notice is, again, we swept all the lows. So all this liquidity is gone again, and you kind of get an aggressive reaction. And by aggressive reaction, I mean you get a wick, liquidity swept, and the next thing you see is bullish engulfing. To me, that shows a little bit of aggression in the market. And it's usually only BFIs that can create wicks and engulfing candles. So as of right now, this zone, we could say this zone's being protected. Again, we'll get off the 1 minute and we'll just kind of have a look. So as of right now, our demand's still holding. When you see areas like this, it's stacked liquidity. And the whole, let's see. So this whole zone's been wiped. Your internal liquidity has been wiped, and if they're not leaving the zone, it's the reason for that is usually to create more liquidity to continue going down, or to obviously go the other way. Now, for those of you guys that joined late, if this top OB goes, we will likely take the high. Like if this top OB does not hold, I can tell you right now, this high will go. There is no inducement. There's no liquidity here. If this goes, this high is going to go, and we can pretty much assume that we're going bullish. Anytime you have a clean push with no inducement, it's pretty limited to how well it'll hold. And yeah, we can just kind of sort of play price. And again, so now we're kind of getting to that. Can you explain why you took the first selling trade? Sorry. Okay, so this sell trade right here, we had a reaction point that reacted to this demand. These two candles, the wicks in here is what took out this reaction point. So the first POI becomes this zone. The second POI becomes that zone. And I'm more than happy to sell off either zone. The reason we're looking for sells is we are bearish. Inducement is just another way of saying liquidity, right? Yes, yes. So inducement is price closer to the OB, and liquidity is kind of anywhere. So let's see. So this right here, where's a good example? So this right here would be dropped inducement for this OB to me. This right here would be dropped inducement for that, whereas everything in here is liquidity. So inducement's kind of closer to the OB. So when price pushes away, we like to see it come back and push away, come back and push away. And every time it comes back, we drop inducement. And as that inducement's gone, the OB doesn't hold. So this is the video I made yesterday. For those of you that did see it, I talked about this. And I actually use this area. So everything in here is liquidity. Everything in here kind of close to the OB's inducement. This wick right here took this inducement. So the next time price came to this OB didn't hold for shit. The inducement is gone. We knew that this OB was not going to hold. That's how I look at inducement. It's closer to the OB. And yeah. Anyone that hasn't watched the video, go watch it. I break it down pretty well. There should be an HD version uploaded in the next day here or so. Let's see what do we got. How important is it to have seconds to trade this strategy? If you're not profitable, stay off the seconds. You will just wreck your account. You'll absolutely wipe your account and you'll ruin your psychology. I got profitable on the 1 minute entries before I ever touched seconds, and I highly recommend you do that. I take a lot of stupid losses on seconds, like a lot of stupid losses. It's very overwhelming sometimes. I don't spend long on the seconds. If it comes to my zone, like right here, I'll go to the seconds, I'll execute, I get off the seconds immediately. It's a very hypnotizing thing, and it ruins you. So yeah, I'm pretty limited to how much I stay on the seconds. So again, we're still looking for sells. Myself, I would probably partial out, I don't know, 50, 60, 70% or something, and I'd leave the rest on, as this is pro trend. I have no problems leaving the rest of that on. We sort of have we could say we have a supply here. And let's see, supply. And depending how you guys are, you may not even take another buy. Like we already got away with making a shit ton on a couple of buys. They're a lower probability. Or you can say that you expect price to go higher and go to your next POI and that you do want to take a buy. Both are completely up to you. Myself, I probably wouldn't look. Would you take a trade at this time? If I had 3 trades bagged at this point, guys, I'd probably walk away from the computer for the day, because in my experience, you just end up giving it back to the market. But would I take another buy? Probably not. I would be more than happy to set an alarm on here and set an alarm on here. And if my alarm goes off, I'd be more than happy to come back and see how price reacts to these areas. I'm not saying you can't succeed taking trades between 10 o'clock and 1300. I'm saying it's lower probability. So you're about to lose the Asia volume come 10 o'clock. So it's just London volume in the market, London and Europe volume. So New York volume, the Chicago CME, which is your futures market, opens up at 1320. So 1300 an hour before New York, London time is when the volume starts coming back. So the idea is to have 2 sessions volume. So when we're trading the Frankfurt Open, we're trading with Frankfurt, Europe, London, and remainder of the Tokyo volume. Come 10 o'clock, Tokyo's volume's gone. Australia, we lose that. So it's just London in the market. So to me, that's lower probability, but it's totally up to you. I probably wouldn't take a buy here, no. But we could definitely interact, look at the interactions. If the group wants to take a buy, I'd be more than happy to. This is the backtesting session. We really don't care. Can you explain, please, the weak and high? Yeah. So if we just go back to the 15-minute. So we have a low point here. That was our structure. This was our high. Now, if I was, so ultimately this becomes our new low here, the lowest point before the real pullback. So this high to me is strong because it took this low. If all of these supplies end up failing and price ends up coming up here and we get like a 15 candle body close, this high now becomes weak and will be run. And that's kind of how I look at it. So that's pretty much all there is to it. Let's take a buy. Cool. Let's take a buy, man. I am so down. Risk takers. I like risk takers. Yeah. So this is kind of our first interaction. Yeah, if you guys want to take a buy, we totally can. Let's see. So this would be kind of your zone that caused, I guess, the reaction point to fail. And then as always, we have our extreme. It's always the one guy that wants to take a buy. Totally cool though. All right, so you're tapped in your buy, bro. So you are kind of getting a bit of a reaction here, which is totally cool. Not the greatest reaction, but you got one. So yeah, we took an L on that one. No worries. No big deal at all. And this is where the whole counter trend versus pro trend stuff really makes sense. But it's really good for people to test this stuff and see them fail, because you won't know what works and what doesn't till you test it. Again, like I said, myself, I would be more than happy to just put an alarm on here and then an alarm on here and wait till price comes back there and see how it reacts. So ultimately, if I look at this high right now and we're breaking supplies to the upside, we could start formulating that the idea that this high is weak. And if we go to the 15 minutes, what I can tell you is this high here failed to take this low. We got a wick below, but we didn't get a candle body close. I want to see a candle body close, take this low out, and then I would consider this high strong. This high failed to do that. So if we're running 1 minute supplies going up, chances are this high is weak, and there's a very good probability it'll fail, which is totally fine, which brings us up to here, and ultimately it gets better pricing. And if we go through that, then we're just going to buy on up and take the next high. The high and low theory works for the most part. You will get to areas where the highs and the lows are weak and where demand's in control, but you're bearish. And that's where you have to be open to go in either direction, because nobody in the world is going to tell you how to play that area safely, because chances are the market could go either way. And usually a couple times a week we see that, and that's totally fine. So yeah, fortunately that buy didn't work out, but that's totally fine. You could say this is a sort of a supply zone, except to me, this supply didn't put in a new low, whereas this supply did put in a new low. So this one's more valid to me. This isn't much of a POI. Yeah, you could totally take it. I mean, if you want to enter that back in, you totally could. For myself, I probably wouldn't. But if that's how you trade, you definitely can. Sir, how can you show the difference between a reversal and a continuation? What time do you prefer? Reversals fail reversals work 2 out of 10 times. Continuations work 8 out of 10 times. That was one of the first things I learned in smart money. So ultimately, yeah, you want to trade continuations as much as possible. Yeah, inducement, absolutely. I would look at that as inducement. Again, and all of that would be inducement too for this, absolutely. Ultimately, like, you don't need to be in every single trade you see, guys. You just need to take the ones that are likely to make you win more often. Would you not class that candle as the first section? So, yeah, you're totally right, 100%. Yeah, that would have been your initial reaction there, for sure. And then I guess you would have said, yeah, if we did that, this would have been kind of our zone, and you might be in this trade. But that's totally fine. Like I said, honestly, guys, I probably wouldn't take a buy. That's totally up to you guys. I like to see a sweep of the low and the high, and I would take a, change a character, flip, get a buy in, then I take it. We already have 2 buys in. Ultimately, I want to see sells. You're with trend. But yeah, you guys are 100% right. I totally marked that reaction point wrong, and that's fine. Yeah, exactly. We bagged 20R, I'd be done. Totally, man. And this is the whole, how do you classify your high probability trade? What trend? What trend, my friend? The trend's your friend to the end. So we're bearish. A higher probability is sells, which is why I'm not in a hurry to take buys. But being this is a backtesting session and a learning session, we're going to take every single trade that the class wants to take, and we can see what happens. To me, counter trend is less likely to work out, but it's also one of those things is, take the risk or lose the chance. But you don't need to be in every trade. So if you're trading both London and New York, chances are you're going to want to break between now and New York and give yourself that couple hour screen break. I don't know about you guys, but if I sat in front of the charts for 8 hours, I would go mental and I would definitely lose that day. Even some days, if I take a loss or two in the morning, I'll walk away for like 15, 20 minutes, take my dog outside and come back. The idea is to get this to where you can trade 3 hours a day and have freedom. I'm not in this to trade 8 hours a day. And that's how you guys want to trade. That's totally up to you. Trading is very subjective and everybody's got different psychology. I know what my psychology can handle and I know it needs a lot of work. So I give myself the bare minimum amount of time at the charts because I know if I spend less time at the charts, I'm going to be sharper. It's kind of like watching, if you're watching, let's say something educational for 8 hours straight, the first 2 hours, you probably caught it all. The next 2 hours, you might have caught a little bit. The last 4 hours, you probably didn't pay attention to shit. What does inside bar indicator contribute to your strategy? Inside bar is just a range on a smaller time frame. So if I see an inside bar, I know that there is some sort of range there on the 15-second or the 5-second. And depending what kind of entry I'm looking for, if I see that, I might go on the seconds in that area and see how it reacts. You don't need inside bar to be profitable. I like it. I don't even notice it nowadays, but yeah, that's all. Inside bar is just a range. And a range is usually a BFI zone. How many trades do you take per day? So being that I take quarter percent trades, sometimes I'll take 2 or 3 positions on one trade and scale in, meaning that if I see a leg, I'll have 2 or 3 positions in it. I'll count that as one trade. So realistically, I probably have 2 or 3 trade ideas a day. So if I'm trading 1/4%, you can definitely see me have like 8 trades in a day, but it's not like I take 8 trades. It's just they're 1/4%. So I don't mind scaling in. If I'm not trading the funded account, then I'm trading my own account and I'm shooting 1 or 2%. Probably try to keep it to 3, maybe 4. Any advice on recovering -6 on live FTMO? Thinking of going with 0.25% risk. Yeah, that's what I would be doing. And if I was you, I would probably be looking more for pro trend trades instead of counter trend. Because if you hit a couple of pro trend trades in a week, you should be able to bring 6% back, no problem. Whereas counter trend, again, they're lower probability. And obviously we all take them all the time, but again, they're lower probability. Yeah. But you don't need to risk a lot of money to make a lot of money. Like I said, if you risk 1/4% and you're up, let's say 2.5%, sure, risk 0.5% on the next trade. But if you lose that one, probably quit trading for the day to make sure you end up a winner. You got to know when to leave the market. How long have you been FTMO funded? Off and on since like May. Originally, I got funded with them last year, and I ended up screwing that right up, hitting the daily loss limit. Then I went back, got funded again, lost it again, and now since May, I kind of been going. I've never really made like a huge amount of money trading 1/4%, but I'm sure as you guys know with FTMOs, you don't trade news. So a lot of times the account only gets traded 2-3 days a week, and I'll trade my baby accounts a lot of the times. So what I'm looking at right now is for another prop firm to get into. And I've been kind of talking shit about funding talent this whole time, But so they ended up paying out everybody that wasn't getting paid, and they ended up getting rid of their shitty spreads, and they went, I think Euro's 0.3 now instead of 0.6. So now that they tightened up the spreads, I'm actually considering funding talent. Reason being is I can trade that account 5 days a week. You don't lose your account if you hit TP or stop loss, whereas FTMO you do. And they consider the weirdest shit news. Like FTMO emails you before the news event, like the natural gas storage that comes out at like 7:30 my time. I'm not allowed to trade during that time because FTMO considers natural gas storage important news for some reason. But they do a few silly things like that. But if you hit off a few good trades, yeah, it's definitely not an account you get to trade every day. And if my FTMO is made 10% per month, risk and 0.25%, absolutely. Absolutely. Yeah, and like don't have like stupid expectations. Have an expectation of I want to be profitable. If that's 5% of the end of the month, great. If that's 20%, great. If you made 20% one month, understand that you're not necessarily going to make 20% next month. It's kind of a long-term thing. You kind of look at it as in, as long as I am in profit, I don't really care how much. Obviously, the more the better, but I used to put a set number on everything. And I'm like, oh, well, I need to make 5% a week, or I need to do this, or I need to end every day a winner. And ultimately, I ended up making less. With news, only trading that specific instrument is restricted. So CAD unemployment is restricted, but it doesn't stop you from trading Euro USD. Are you a full-time trader? Yes, I am. So anyone that followed me, you'll probably notice I only ever really trade Euro USD, the odd time GU, and I was trading GJ, but what I found with 3 pairs was I was taking too many trades in a day. Do you only trade the Forex market? Yeah, completely, man. I tried US 30 and I tried gold, and the smart money concept works on them. What I found was your risk to reward wasn't any better than it is with Forex. 6 months of study is enough to start being profitable. That depends on you, man. That totally depends on you. I've seen people get profitable in 3 months. I've seen people do this for 4 years and not be profitable. It all depends on your understanding, your psychology, your trade rules, how you trade. What time do you get up? I get up at 4:20 in the morning. 4:45, I'm at the charts, and usually by 8, I'm done. 8:30 at the latest, but usually 8 in the morning, I'm done trading. Yeah, it's a great time, man. I'm in bed by like 8:30. Yeah. So we'll kind of carry on with this here. But yeah, as far as how long it's going to take you, I can't tell you that. Everyone's different. Like I've seen people get this right away, and I've seen people not get it. And a lot of the times it's the amount of work you put in or your understanding of it. So my journey with this has been, I started Smart Money Concept at the end of January in the ICT mentorship. And I kept paying him till about the end of May. And I couldn't understand anything he talked about. And I basically it was a waste of time for me. I know ICT makes a lot of good traders. I can't listen to the guy. You get 10 minutes of information in 2 hours. I entered Phantom at the end of March, and May was kind of the time I started getting consistent. And I can say now my trading's getting where I consider myself a little better trader and even more consistent. And I'm kind of hoping, I don't know how long my psychology is going to take to be like way better, but I still find myself getting flustered, or I still find myself not being able to hold trades to the end. So I'll partial out like 50 or 60% before it hits my TP, even though I think it's going to go there, because I don't know. I just want my money, and you never go broke paying yourself. With where price is now, would you consider demand failing, supply back in control? I guess you would, yeah. I wouldn't be selling from here if we go back to our whole range. You're kind of at the 50% of the range. This to me is nothing. I want to see something from these two zones. We're still holding a part of this too. So if we don't get another trade, I'm okay with that. If it comes back higher, I am okay with taking a better price sell. But yeah, you could sort of say with demand failing, supplies back in control. You could say you have a sort of an area here. And this again, you could wait to see how it reacts. And if your supplies are breaking to the upside, if you're absolutely horny to get in a trade, you could maybe look for another trade. So demand's failing right now. And yeah, you could definitely say supplies back in control. So depending how you look at the market again, some of you guys might consider this a failure, and some of you guys might consider this another sweep of liquidity. And the 1 minute, it gets very, very noisy. So what I'll do is I'll usually let price go forward a little bit. I'll see what it does. And if you ever want to know what price is actually doing, go back to your 15 minutes. And price went lower, but all you got was a wick once again. What I can tell you with all these wicks is that we keep sweeping liquidity and price will likely go there. But as of right now, demand's holding. And that to me is saying this high is weak and will likely go. And on that trade idea, if you guys did want to look for another buy, we could maybe look at taking this high. And, you know, if you're smart, you'll pay yourself at the high. And you could see if your next area gets hit. Again, being counter trend, you don't need to be in every single trade. But if you guys see an area that excites you and you think you need to be in a trade there, let me know. I'm more than happy to take a trade for the class. It's all up to you guys and what your risk tolerance is. To me, again, being counter trend, I'd probably want to see this high go. Like, yes, that's a demand, or yes, that's a supply. Yes, that's a supply. If you're pro trend, if these break, yeah, I'd be more than happy to jump in a trade. Being that we're counter, I probably would not. And if we just look at this with a little bit of logic, you guys seen on the 15 minutes, there was no candle body close. So being that we didn't get that, I'll look at this as another sweep. And we could say change of character bottom. Now for this change of character to complete, this high's got to go. Jump up to the 15-minute totally, man. Oh, hold on. That's the 15 there. My question is, how do you not get lost on the 1 minute? So I actually switch to the 5 minutes sometimes just to get my eyes off the 1 minute. I don't use the 5 minutes for anything. And myself, I run a split screen. I have 15-minute on the left and 1 minute on the right. And 90% of the time I'm looking at the 15 minutes. If I can't see nothing on the 15 minutes, I'll play around with maybe the 10. If I spend too long on the 1, I'll jump up to the 5, 10, or 15 and get off the 1, give my eyes a break. Let's see. How do you find Phantom Elite? Phantom Elite was pretty good. For me, what I found was it was a lot of their refined content and what they have in their Zooms. However, you didn't have to watch every single video Phantom put out just to get all that knowledge. You got it all in one weekend, and you got it all from the 5 of their highest ranked coaches, so to be. So yeah, it was worth it in that aspect. It was definitely worth it. Myself, if I did it over again, I probably would have spent that money on paying Sketchy for one-on-one. I'm a very visual learner. I need it shown to me, and I'm like a little baby. I need to be catered to. So if I'm in a session with one-on-one with somebody, I learn way more than a class. So myself, like I've paid Aaron for coaching, I've paid Sketchy for coaching, and I'm planning to pay Sketchy for a little bit more coaching to refine my seconds, because I'm still I'm profitable on the seconds, but I'm taking a few more hits than I'd like to be. And I think a lot of it's psychology, but I think a lot of it's me being a little too aggressive. But yeah, I definitely plan on buying Sketchy's coaching again and dial my seconds in more. And I'm kind of starting to stay off the 5-second now, unless it's news, and only sticking to the 15. I find the 5 hasn't been a high hit rate for me unless it's news. So this is obviously a supply. I expect some sort of reaction for sure. We want to see this go. Yeah, a god. Yeah, Sketchy's fucking, yeah, he's incredible. He's insane. That's kind of the level I want to get to, but I think I have a long ways to go, as his psychology is quite a bit better than most, I think, because he trades two sessions a day, and I don't even know if I'd be able to do that. Is it worth it to trade on holidays? For instance, Labor Day, I'm not trading tomorrow. I used to trade holidays, and I can tell you that I've lost more money than I've made. You want that volume. So I won't be trading. It has worked out for me like once. Most times it hasn't. Like I didn't even trade NFP because NFP didn't work out the way I had it planned. I had a plan of where I wanted price to come, and then where I was going to get in on the 5-second. It didn't do it, so I didn't execute the trade. I seen a trade after the fact. However, it wasn't part of the plan, and I just took no trade on Friday, which is totally fine. But yeah, usually with shit like CPI and NFP, I'll plan a trade of what I think should happen and jump on the seconds. And if that specific thing happens, I'll jump in. If it's anything other than that, I won't be in the trade. So yeah, that's kind of how I play news, and that's completely up to you. Do you execute trades on TradingView? No, I have MT4 open. Analysis is on TradingView. Trades is executed right on MT4. I have my MT4 open to be able to use magic keys. So no, I execute on MT4 only. Do you use a trade copier? Yeah. I was using FX Blue. I've been having quite a bit of issues with it. I switched to Social Trader, which is like a cloud-based copier. I started using it, and having some issues with that too. But I'm trying to figure it out. But MT4 has hotkeys. I have no idea. I just use magic keys on MT4. Like I'll have the screen open and I'll press one button on my magic keys and I'm in trade, or I'll partial out a trade, or I'll fully close a trade. I don't actually click much on MT4 itself. If I put a limit in, then I usually do it on my phone, as MT4 on the computer is just really ghetto and I have no use for it. So we have sort of a reaction point here. Right now we have a trade idea based that this high is weak. Depending how this trade forms and where we are compared to our premium or discounts, we may be able to look at another buy if you guys want. Rob, for intraday, what range should I focus on in terms of structure, premium and demand areas? I'm not actually sure what you mean, but if you're selling, you want to sell from premium. If you're buying, you want to buy from discount. If you're in kind of range bound, if it's a lag and you have a continuation, just jump in and expectational order flow takes over. And, you know, if it's a bullish leg, keep buying until the buys don't work. If it's a bearish leg, keep selling till the sells don't work. Expectational order flow teaches us that we can keep going with the trend so it takes us out. I'd want to see that supply taken out before buying. Absolutely. So back to our change of character, we took the lows. I need to see these highs go of this supply. If that doesn't go, I'm not interested. And depending how it goes and where we are priced in our premium and discount, we may or may not even want to execute a trade. And that's completely up to you guys. Myself, I would likely not be in this trade, but seeing how this is a backtesting session and this high is weak, I think at the very least, we could probably run that high. So now we could say this high was taken, and for a change of character here, you have a complete change of character. So the lows were swept, the highs were swept, and you have a flip, which is more or less what we're looking. So now, if it was me and I was looking at this, I would say this wick took out the reaction point. That's what initiated the move. Second, not sure what you're talking about, bud. So to me, this would be the area that caused the reaction point to go. If this area fails, I probably wouldn't look at any of these. I'd be looking at the extreme. And I'd probably, being that we're counter trend, I probably wouldn't take a risk entry on the extreme. And if we look at the size of that too, what is that? 3.4 pips, and you got to cover a little lower. Yeah, I probably wouldn't take a risk entry on that. A little large. So myself, I'd be looking at where we're priced. So we're just below the 50%. I mean, it's not the greatest pricing, but we are in discount. This high is weak. I'd probably be happy to take that. I mean, yeah, what do we have? We have 3 wins, 2 losses. It's not a bad day so far. Like I said, most people would probably quit with 3 wins. My experience, after 3 wins, you end up losing the next 2 or 3. And that's what's called a trader's high. You think you're God, and the market humbles you. Do you ever trade both sessions? No, man. London's like, I think London's like 10 or 11 at night for me. And I'd be up till 1 in the morning. I used to trade just London and sleep in for New York, and my whole life was just messed up. Because like my girl still wakes up at 5 in the morning, does her thing, and I just got to bed and I couldn't sleep. Then the dog wants to walk, and then I go to the gym all tired. And I don't know. I found my life was messed up. I was always even more tired than I am now, and I didn't seem to do any better. If I lived somewhere like Europe, yeah, I would totally trade just London. You could do a lot better trading London with Euro or GU. Like, it just seems to move better for London. London ultimately moves the market. That's your financial center of the world. Everyone thinks New York moves the market, but it's London. UK have it so good. Absolutely, man. The London folks always seem to get better setups. And that's where we have to be a little more realistic with New York and be happy with your 5R or 10R. Chances are you're not going to catch a 30 or 40R trade every day like the London folks can. Some days, yeah, it's just less realistic for us. And that again goes back to your psychology. Like, if you can hold a trade for 3 days, you could probably have those Rs. Myself, I probably have that trade partialed out 18 times before it hits 40R. But you never go broke paying yourself. Somebody said that to me when I started trading and stuck with me. What tool are you using for entries? That's just a fib. That's a fib with 25 and 75% levels. So it's 0, 25, 75, and 100. If you're using market or if you're using limits, I put an order on the 25% of it, and I'd cover just below, cover somewhere in here. Like I said, most times I market execute now. But yeah. And some people use the fib on like the 50%. Some people take the whole fib. Like, if your fib ends up being like 1.5 pip, you don't need to get greedy and take 25% of it. Just take the whole fib. If your fib's like 1.1 pip, throw a pip and a half stop on it and take the whole fib. If my pip's 0.8 of a pip, if my fib's 0.8 of a pip, I am not going to get in there and be like, let me try to get this order with 0.4 of a pip. Chances are it won't work out with spread and stuff. Depending on your broker too, like FTMO is not bad. Fusion Market's not bad. Funding Talent's apparently not bad now. They're down to 0.3. So I'm actually willing to give them a shot now. We'll see. Do you factor in commissions or disregard when looking at risk? No, I don't care about commissions. So for example, if I partialed out 20% here and it came back and hit my stop loss, I'll break even and I'll eat the commissions. And a lot of the times what happens too, depending how aggressive price comes through, you'll eat a little bit of slippage. The point of portion out 20% is, you cover like 95% of your money. You're covering most of it. Like if I lose whatever, a few bucks, I don't care. I just don't want to lose the whole amount. I also, like I said, I'll partial out on the longer trades too. So I'm always taking stuff off the table. And yeah, so now if we look at this legitimately, we could say this high's got to go. So I would pay myself at this high. The second target would obviously be this POI. If we go past this POI, we're absolutely bullish and we're running the next high. And when I say go past, I don't mean 1 minute. I want to see a 15-minute body close outside. Again, like management, there's so many ways to do it. Like I know a lot of people will get in a trade right here, and as soon as these highs are cleared, they'll go break even. I know a lot of you guys that came over from Tyson's group. That's how he manages, and that totally works too. It's all whatever makes more sense to you. Myself, I found myself I would break even and then run to targets, so I started just partialing out at 4R. So if I was looking at this legitimately, let's see. Also, if the trade doesn't have 4R in it and you can't break even before TP, I probably wouldn't even take the trade. So you have a 7R to run these highs. Like I'd be more than happy to take that. I would probably take 80 or 90% off and leave a little runner on to see if you make your next POI. You run fibs on wicks only? Do you ever run fibs on a leg? Yeah, I'll run fibs on a leg. Depends on the area, man. Like I adjust my fibs accordingly. I look at my fibs on multiple time frames. The fibs is meant to be a guideline. You will find yourself where you just have to sell and discount, or buy in a premium. But usually it's because expectational order flow took over and you expect price to continue and you doubt it's coming back. And that's ultimately measured by momentum of the market, how aggressive it's running, how fast it's running. At the end of the day, nothing's ever guaranteed. So pay yourself. I got a buddy in the UK. His name is Lewis. He's an ICT trader. And Lewis will let a trade run like 100 pips and not take any profit. And then it'll come back and take him out. And the guy's like a phenomenal trader, but he just like never pays himself because he wants full volume on every trade. And he wants 20, 30, 40R on every trade, full volume. And he'll either break even or lose, even though he's in profit. So he finally started paying himself and he's been consistent. But yeah, don't get too greedy. You'll never go broke paying yourself. I'll keep saying that over and over. Like, again, if we look at the reaction here, you kind of got a V-shaped reaction. You got an aggressive push away. That's what we like to see. This trade that we got in here, you can see we tapped in. And you can kind of look at how poor the reaction was. There wasn't an aggressive push away. I'm not saying it won't work out, but I'm saying I don't like to see that. I like to see this. I like to see wicks and big candles. We like to see momentum, at least on the initial tap, like something. And how you guys play the fibs is totally up to you. Like I got a buddy that he only uses his fibs on 70 and 30%. So I actually got his fib. We'll just pull it. I don't use it. I've been testing it. But he won't enter a trade unless he's in this zone for buys. And he won't enter a trade unless he's in this zone for sells. He wants to be the most premium or the most discount. He stays out of this zone completely. As a lot of the times around the 50% you get wiped. So how you want to use the fibs is completely up to you. I am just currently testing this and a couple other things to see if I can make trading a little higher probability for myself. So we'll kind of play this, see what happens. So you're again in dead volume time right now. In all reality, chances are we wouldn't be in this trade. If we did take this trade, it's because we thought this high is weak and needs to go. Like someone said earlier, you're up 20R on the day. You probably wouldn't care at this point. This trade's probably broke even by now. I think it was like a pip and a half stop, so you're break even at 6 pips. And we just kind of, yeah, carry on, see what happens. On the sell side of things, we want volume in our favor. So 1300 is kind of when NY volume starts coming in. And so did that take the highs yet? So not yet. See, there goes your highs. So I'd probably partial out 80-90% of my trade, leave a little runner on to see if it makes the next. But you guys can kind of see how price interacts a little different and a little less probable when the volume's lower. And test this out for yourself too, and you'll kind of see that the kill zones are the time you want to trade. So now if we're looking at this realistically, Chotch and flips are insane. Yeah, they are, man. That's all I trade. And pro trend, we don't necessarily need a chalk. We can just trade a flip. So if we look at this right now, I would say this is our sort of demand. You could probably say, wouldn't you want to see this demand go? No, I don't, because we're bearish. If this one goes, I'm more than happy to take a sell. And you will get to areas where chalks and flips will fail 2 or 3 times, but the third or fourth one takes off on you and you land an 8R or 9R, and suddenly the couple losses don't matter. So yeah. So if you guys go back to what I was saying, look how this top's forming, look how this bottom formed. This is kind of a V-shaped formed bottom, aggressive push. I like taking trades off these. These, I don't mind taking a trade off them, but I like to see an aggressive push away. I want to know the BFIs are present. How often do you backtest? Probably 5-6 hours a week. I probably should do like 10 or 12 if I'm being totally honest. And I switch between MT4 and TradingView. To do MT4 backtesting with the class would be an absolute disaster. It's just not very interactive and it's kind of ghetto. So we'll be doing TradingView for the guys in the class. It's just easier. But yeah, I do about 5-6 hours a week. And what it is you're looking for the same setup over and over. What draws your attention to that demand zone? Oh, right here. To me, this is your last demand that put in the high. This is ultimately your swing demand somewhere in here. But being that we are bearish, I don't need to take out the swing to go start selling. If this one goes, I'm more than happy to sell. Do you know any software? Yeah, Soft Forex. I use Soft Forex. I think it's like $60 or $70 for a lifetime membership. It's kind of cool because it's more realistic, but it's kind of shit because it's MT4. So there's definitely like good and bad with it. What I recommend is get the software and do one backtesting session with MT4 and then do the next one with TradingView and switch back and forth. They both have their advantages and disadvantages. For example, MT4, you can't rewind as far as you can with TradingView. It's not as friendly, I find, but it is more realistic to being in a real market. So yeah, again, going back to the way we had our so you may or may not, I don't know, that's not really much of a reaction to me. So we kind of came through that, and depending how you guys look at it, because of how close we are to the extreme, I would probably take a sell off this extreme. Let's see. But yeah, I would be looking for a sell off that extreme, and at the bare minimum, I would run this low, the very least. Then I'd be more than happy to hold this for quite a bit longer too. We are bearish, so. But we'll just see what it does here. And yeah, like again, this is a very poorly formed top, but A lot of times they go, a lot of times they don't. It's one of those things where you just got to let your losses go and understand that your risk to reward is so good that you don't care. So there's your sort of reaction, and we took an L on that. So now if we go back and we look at this a little more, if we look at this a little more realistic, we have a bit of a sweep here, and let's just see how this plays out. But being that we're still pro trend and we're still bearish, I just need to see this go. That's the nearest demand for me. I just tapped the supply. That could be liquidity. Yeah, so remember when I told you guys this is a poorly formed top? Poorly formed top usually is liquidity. So we swept all the liquidity here. If we were waiting for a chalk, we'd need to see this low go. I don't need to see this low go because this is pro trend. If this demand goes, I am more than happy to jump in, and that is completely up to you guys. But it's time to get off the 1 minute and have a look at the bigger picture. So there's a couple of things we need to adjust now. We're going to adjust our fib to this low and this high. We could probably get rid of this zone now. It's failed, candle body closed. Again, if this high goes, we're buying. And at that point, I won't care about the fib because if this high goes, this high, like if this OB fails, this high is gone. So that's where the fib becomes irrelevant to me. But as long as we're in the range, we're going to kind of play with the fib a bit and see what happens. So how do you know where it will go after a sweep of supply? Trade away from the sweep. So you see these long wicks, those are BFIs protecting that zone. This zone has been swept. We are bearish. So anytime we see wicks, we want to be trading away from them. Does it work 100% of the time? No, you need to have more confidence than that. But myself, right there, that's a very aggressively formed top. Your liquidity has been swept. I am more than happy taking a sell off this zone. So we took a loss on the first one. I have zero issues with selling on this. How large is that? Oh, that's almost 3 pips. A little large, but that's fine. No, I mean, if the big supply is broke, then you told that the high above will be swept as well. Yeah. So if we got a 15 candle body close above this supply, I'll be looking for a buy. Absolutely. Why is it? Because the high becomes weak. Where's the reaction point? You don't have one. It came right through. Yeah, you don't have a reaction. We only have one area to get in. Since this is pro trend, we can get in here. If this was counter trend, we'd want to see the chalk complete and this bottom would have to go. And that's where it's very important to understand your market structure. Why did you draw your fib up to the middle and not to the high of the range of the leg of 15 minutes? I have no idea what you're talking about. This is the range we're playing in. So that's your low, that's your high. As long as we're staying in this range, that's where I'm going to run the fib. If this range is left, depending what it does, I probably wouldn't be using the fib anymore. And that's completely up to you. Like, I know a lot of guys don't even use the fib at all. It's just, I'll play price action, and that's totally up to you. Some days I use the fib religiously when we're in a range, and some days the fibs, it doesn't stand for a whole lot, right? And in that case, I'd be more than happy to just toss the fib out the window. But in a lot of cases, the fib will save you from a lot of shitty trades, a lot of poorly priced trades. And the other thing is too, is you don't need to be in a million trades. Myself, I would be looking at So if we go look at the 15-minute, myself, I'd be more than happy to run this low. And obviously you take heavy partials when you run this low, but this low is gonna go. We came and made a high, then we've had multiple fail reactions. We failed to take that high. As long as this stays intact, this low is gonna go. I don't know when it'll go, and that's ultimately up to you. So this is one of those things I would probably take 60-70% partials at the bottom, because it doesn't have to do that, but I'd be more than happy to leave a runner on and run this low. The low needs to go. There's no inducement here either. Your only sort of inducement is this, and it's been run. So if this low goes, this low is going to go. There's nothing here. At least that's my theory. Seems to work out most of the time. Not always, but that's with anything too. The high of this fib appears to be in the middle of the range. No, the high of this fib is premium, bro. Are you talking why we're not using this whole leg? If price comes past this supply, oh, the 4-hour range, yeah. Yeah, you're in the middle of the 4-hour range. Yeah, you would be for sure. But that's where I'm saying the fib is subjective. Like some guys trade without it completely. I'll pull it on this range to know, like for example, I wouldn't take a sell down here below the 50% because it's poorly priced. How you use the fib is completely up to you. You can be 100% profitable without the fib whatsoever. But yeah, you always be poorly priced either on the daily or the 4-hour or the 8-hour. There will always be something that basically says you shouldn't take a trade, but then you got to find a reason for what says you should take a trade. And that's ultimately up to you and your risk tolerance. Depends how you guys' risk tolerance is. Like mine, I'm a little riskier. Some guys, you know, they look for that 1 or 2 trades per day or per week or whatever, and they want just the high quality stuff. That is 100% up to you. And yeah, I am again just looking for sells, reaction types of POI and how you use it. Again, if it reacts, we're going to look at what takes out the reaction point. If there was no reaction point and we came right through, I'm just going to go to the extreme. And the reason we do that is there's no interaction between buyers and sellers. The only BFI money that's present is likely in these wicks, as there was no interaction because we came through it in one candle. Can you explain again why you took the last sell? Yeah, for sure. So we're bearish. The first sell I took because there was a chance this zone could hold and we could sell off that. Being that we're bearish, the best price zone we have to sell off is this one. And that's ultimately why I took the sells. And the first one failed. I have no problem jumping in again. If this one here failed and price is still stuck here, I would jump in at the third time. I have zero issues with doing that as long as something's showing me that demand is going to lose control and supply takes over. Like you are bearish, we are expecting price to continue going down as expectation order flow basically says it should go down. You're not going to be right every time. The idea is to be right often enough that you're profitable. And altogether, what have we taken? I think 3 losses. And that's really not that bad in the grand scheme of things. Would you class that supply zone as a buy to sell 6? You're talking about this supply zone? Yeah, so I'll pull wicks on the 15. You guys that come from Tyson's group, you'll probably, let's see. Yeah, so Tyson's group, you would have pulled a 5-minute POI there. That's how he trades. Myself, I stay with the 10 and the 15. I'm more than happy to just use buy to sell wicks. It works for me. It's all what you're comfortable with. There is no wrong or right. There's what makes sense to you. If it makes sense, go with it. If it doesn't, refine it till it makes sense. And ultimately, this is probably the best price sell you're going to get right now. We'd be break even on this trade too. We would have partialed out. I mean, if this was 400 KFTMO, very well done. Could be done for the quarter, exactly, man. And that's what I'm saying. You don't need to catch every trade. Even if it's not a funded account, you can, I know some guys are trading 1, 2, 3% on a small account, and you can multiply it pretty quick. But to multiply it, you got to not take a billion trades. Take your highest quality trades, take them in the best time of the day. Myself, I would not be looking for any more buys. Like, if you guys did look for any more buys, you'd be absolutely nuts. You definitely can. I wouldn't look for any buys. I'd be more than happy holding this trade. It's broke even. We hit 4R. So completely up to you guys. If you want to start looking at other trades or a buy idea, we can look at formulating one. However, I probably wouldn't. So I'm going to just retract this one a bit. And what we could say now is we have a sort of a supply zone here. Not the best supply zone, as it hasn't put in a new low yet, but it's some sort of a supply zone. It's something, can't ignore it. So we'll definitely mark it. But yeah, if you guys do see something else you want to take, like I said, we can definitely throw a trade on. And yeah, myself, I'm good on the buys. I'd be more than happy to scale in another sell. So yeah, it's totally up to you guys. But I think we've hit off. We did pretty well on the buys. What did we do? We lost 2. We made it on 3 of them. That's pretty good for counter trend. Again, once this trades break even, like, you could probably just walk away from the chart. You don't need to sit there and stare at it, especially when price does stuff like this. You don't need to sit there wondering what's going to happen. You're broke even. You're up on the day. Leave it. Go. Or if you're looking for another trade, you can look for another sell. Where's the likely area to sell from? Unless it comes up here, I'm not interested. Again, I like my higher time frame POIs. I don't want to sell off this. How long would you keep that demand zone? Until we get a candle body close on the other side of it. So it's still holding. Each time we tap it, it gets weaker. There's no inducement left there. For me, this demand needs to go. And sometimes they hold for a little longer, but there's really not a lot keeping it there at this point. If you were really high risk, you could say this was a supply, you took it out, you could jump in here. However, your counter trend, and that wouldn't be enough for me to jump in, being that it's counter trend. I wouldn't even think about it. And if you miss a trade, you miss a trade too. Being counter trend, we want to see a complete shock, right? Yeah, that's liquidity for sure. You took the lows here. So if this high goes, you could say you got a chalk, but realistically, how many pips do you have between here and this supply zone? Probably not enough to put risk in the market. I mean, you could look at it. I wouldn't. But yeah, you're always like, any trade idea you guys see, if you think it's a great idea to trade it, back test it, see if it works for you. If it doesn't, you'll know for next time. Myself, I know buys are counter trend. I know that we took 3 buys that made money. I know that chances are if I keep taking buys, it'll fail. What time and why would you stop trading? So your volume leaves around 1600. And the majority of your volume is gone by 1700 London time. So I won't take any trades after 1700. Ideally, I'd like to have my trades in by 1600 London time. And it all depends on the day. Like, some days New York's all right. Some days New York is just not as amazing as London. Like, London definitely seems to have the better setups. Yeah, you could say that's a supply. You could sell off of it. You could even say that's premium, except that's to me, that's a 1 minute zone. I want to see a top of 15. So if I look at 15, there's really nothing there. My 15's here. Depending how you trade, you may take a sell off that. I wouldn't. High probability. Yeah. So with trend, supply demand flip is enough. Counter trend, you want to at least chop. Yeah. Myself, I wouldn't take a sell off that. You can, and it can work out for you, but you also have an amazingly priced position that you're holding here that you're broke even on. That little zone there, again, for myself, unless I get a 10 or 15, I mean, yeah, you got like a little 10-minute zone. You could say that's something. You could even say you have a little bit of inducement here. Yeah, you could probably form a trade idea off that. Totally. I would be more keen to that than taking sell from here. So yeah, depending how it reacts, yeah, you can. But again, let's just have a look at the reaction. So there's your initial reaction. And that's a really good reaction. It's like a very good reaction. So ideally, we could say, I guess this would be your sort of demand zone. So you didn't really get much of an interaction here at all. Again, with zones like this, I would be just looking at the extreme. This zone here, this zone reacted to the previous demand and blasted through it. Yeah, exactly. So this zone did blast through this demand zone. This would make it powerful enough. Yeah, this could definitely be a legit trade. If I can get something to pop up on 10 or 15 minutes, I'd be more than happy to look for a trade. Seeing how we blasted through this demand, I would probably want to take a trade off this. That's a little bit late, but okay. But yeah, totally. I'd be more than happy to do that. So you do also, yeah. Let's see how it reacts. We'll take that sell, guys. So you're sweeping your structural liquidity right here, as someone mentioned earlier. This is actually this zone that never reacted before. I wouldn't take a buy off it, not a chance. Depending how crazy you are, you could probably take a buy. No, you wouldn't. Again, it's not long enough of a run, but we do expect at least this zone to get mitigated. I'd be more than happy to sell off that, seeing how it popped up on 10 minutes. So you do have sort of a supply here that gave you that low. Except I don't know if there's enough pips there to even think about a buy. Again, we're counter trend, so we're going to hold out for this sell and just see what kind of reaction we get. So there's your sort of interaction between the supply. You could say supply failed, took out your reaction point, and I would say something in here caused it. Being that there's not enough of a run between here and here, I wouldn't think about taking that. It's counter trend. We've taken enough of those. Had you taken it on that, you would have got in. So we said we were going to take a sell on this extreme. Let's take it, see what happens. Literally just after 25. And I would be more than happy to hold this to the same area as the first one. but definitely not a bad idea. Someone was obviously paying attention there. It's even a proper reaction. I like to see wicks. Oh, and yeah, that'll happen too. So we took an L on this. No big deal. That's just part of trading. Now what we could say is what caused these higher prices, and we could say this demand did. So now we could see how the reaction to this demand will be. As this is our 15-minute zone that's unmitigated up above. And ultimately, we just want to see what kind of reaction we get here. And again, guys, we're still bearish. Don't be afraid to throw another sell on if something's legit. So your initial reaction point, you could say, is, I guess, I would probably even lower this to this. So this would probably be your real initial reaction along wick. And let's just pay attention and see what it does. If you get another sell, great. If you don't, you're in a pretty amazing sell. Like, that's as good priced as you can be, really. Very properly priced. So right now, you could say this is kind of a failed reaction. You didn't get a new high. So that's very good. Right now, that's kind of looking like the bears are still in control, because it didn't break a swing low. Isn't the high where price? Yeah, the high would be weak, absolutely. 100% it would be. At the same time, though, you're bearish. You are bearish, so you'd be more high probability to look for sells. So it's just like this demand zone. It's been tapped into so many times. It's weak. It's got no inducement, but we took trades off of it. But yeah, 100%, it's completely possible to come through this. And that's just always the chance we take. And that's just like, it's part of trading. Myself, I'm going to always look at what took out the reaction point. I would probably find something. Yeah, exactly. Exactly. You got a complete shock. And myself, I would be looking at these sell to buy wicks. If you're not sure how to pull these zones, you could take the whole candle, which is probably this whole black candle with this wick. Depending what your risk tolerance is, I would probably just throw a trade on this. What makes a strong high? If the high fails to put in a new low, it's weak. If the low fails to put in a new high, it's weak. Again, you'll get into zones where both will be weak. So myself, I would be happy to take a sell here. I would probably only cover this wick. If it takes me out, I'd be more than happy to jump in again on this. But I would not cover this whole wick. It's just too big of an area. I would sooner take the loss and have a bigger position, jump back in. So that's 2 pips. That's acceptable. Depending how you guys do, 3.6. No, that's too big. That's just not happening. Absolutely not. So, and again, we're still in this trade too, right, guys? And you're up whatever from the previous. You're also getting towards your, you're also, so again, long wick, V-shaped recovery, very aggressive. We like to see that. We've seen it here, didn't work out, that's fine. We see it here, yeah, exactly. 100%. So we do start losing volume here. At this point, it's totally, yeah, you'd be risk off, leave it open. By 1700, you don't have much volume, but yeah, I'd be more than happy holding these. Like, your risk off, it doesn't matter if they go. Obviously, we want them. Everybody wants to make $1 million in 2 trades. It doesn't work like that. So you're kind of at the end of your volume. You kind of play price forward a bit and see what happens. And at the very least, I would run this low. I would take some partials there, depending when it does that. So these trades have made you plenty of money just for this low here alone. Let's see. So just for this low, you're, oops. So this low would be TP1 for sure. That being TP1. So if we go back to 1 minute, so if you were smart, you would pay yourself here. So that's 9.7R. I would probably take 60-70% off there, and you got an additional 10R. I would probably take 60-70% off there. And in all reality, just leave your stops open and look to run the week low. Like, there is no reason for it to stay intact. And if it doesn't work, you've paid yourself a lot of money. But in reality, I don't know, this takes a session or two or how it works, but this low has got no inducement. Like, there's nothing here. This has eaten up all the inducement. We're making lower prices. You'll likely get some sort of reaction, but this zone will get wiped as quickly as it got made. You need that inducement. And yeah, and there she goes. So ultimately, that's how I would frame a trade. You're always looking at what's weak and what's strong. Like, I don't know, some of you guys have been following me for a while, and looking at the daily, I've been talking about this daily needing to go for, God, I don't know. I was saying this daily needs to go for probably weeks and weeks and weeks. And this low here failed to take this high. I knew at some point this low needs to go. Whereas the next low here, you have a sort of a stronger low. This one's strong in the sense of it made a new high. This will likely be protected. This is likely inducement for that. So again, if you play this forward, and there goes your low. And now you can formulate an idea that this has been mitigated, and you'll likely see some sort of retracement. That is literally how I try to frame my trades. Sometimes it's easy to figure out what to do. Other times it's just like, no matter what you do, you can't win. And that's the nature of the market. Does anyone have any questions here? We're kind of getting towards the end. And any tips on creating a daily bias? Yeah, so for me, I look at 4-hour structure and daily structure. Like, if ultimately daily trumps 4-hour, you just, it all comes down to structure and where you are. I don't really know how to create an easy bias for you, but ultimately your 4-hour and your daily structure will guide you, and your 15 is kind of your micro. So if daily and 4 hours bullish and 15 is bearish, it's likely 15 is just a bit of a retracement to mitigate something on the daily or the 4-hour. Yeah, you bet. And for anybody moving forward too, we'll be doing these sessions every Sunday. I'm probably going to do 6 or 8. Adrian, yeah, solid backtesting session. Thanks to all you guys for coming too. If you guys don't mind too, if you enjoy the backtesting session, tag me on Instagram. And what I'll do is I'll give away a few free spots to next Sunday's session to anybody that tags me in their story. And yes, everybody will get a recording emailed to them. Please don't come at me saying you don't have HD access right away, because it takes YouTube like a day or two. Can you please explain counter and pro trend? So counter is going against trend, and pro trend is just going with your order flow. If you're making new lows, you're going to want to keep selling. If you're making new highs, you're going to want to keep buying. There's probably not enough time here left for us to do market structure, but yeah, it's ultimately where you are in the leg. It's I don't really have an easy answer for that either. It all comes down to market structure. But yeah, if you guys enjoy this, definitely tag me on Insta, and I'll give away like 3 or 4 seats next Sunday's backtesting session to anyone that tagged me. Next Sunday's backtesting session, I'll be out of town, so it'll just be on my laptop. It won't be on the widescreen, but we'll still kill it. And for the time being, I think we're just gonna do Euro, guys. And maybe in a couple of sessions or something, if people get sick of Euro, we could look at GU. Gain a lot of insight. Perfect, man. And you guys can see how just by waiting for 10, 15-minute POIs, we kept ourselves out of a lot of trades. And a few losses here and there are totally cool. But for the most part, all our trades had some sort of an idea and proper pricing behind it. And that's all we're looking for. And we made something of a very messy area, basing our bias on what's weak and what's strong. But yeah, give me a couple hours, guys. This will get processed. Everybody that whatever email you paid with, you will get a link. And one last time, give it a day or two for HD. It'll probably just be standard definition today. And yeah, I'll get Sunday's next backtesting session will probably go on sale either today or tomorrow, and it'll be the same time next Sunday. And like I said, we're planning on at least 6 of them for now, maybe 8. And past that, I haven't decided yet if I'm going to keep doing it. You have a blessed week too. Thank you for coming out. And yeah, see you guys. Thank you for coming out. And yeah, you'll get the link, and I'll see most of you next Sunday, I imagine. Perfect. See you guys.